Hey, what's up guys? John here. A lot of people go through problems with their credit. They'll go and make one mistake that will take them completely off course and take their credit score from a 600 or a 650 or maybe even a 700 all the way into the 400 or 500s, making it so hard for them to accumulate credit card lines and debt and mortgages. Debt is what generally helps people get ahead in life when they use debt responsibly. But when you don't have access to debt, it makes things so much harder. So in this video, I'm gonna lay out this step-by-step blueprint of how you can increase your credit score from in the 500s to the 750 to the 800 to the 825 range if you do exactly what I say step by step. I myself have been through some credit problems. When I was about 21, I took out a credit card and I was late on one payment. I actually completely forgot I even had the payment. It was for $18. It was an $18 payment. I forget what it was for, but I just forgot about it. And 1 month went by, no problem. 3, 4, 5 months went by. I get something in the mail saying that I'm delinquent. I look at my credit score and it plummeted. Ever since then, I've been so diligent, checking my credit almost weekly and just very responsible with every single credit card that I have, every debt that I have, every expense that I have, to make sure that that never happens again. And I'm sure maybe even you went through a similar situation. So in this video, I'm gonna lay out that step-by-step blueprint to help you clean up your credit score, to help you get ahead. So please smash that like button. When you hit the like button, YouTube's gonna share this content to educate more people about personal finance, real estate, and passive income. So please smash that like button. Let's begin. So what is credit and how does it work? Well, mortgage brokers, lenders, and institutions use your credit score to gauge the level of risk that they're assuming with doing business with you. It makes sense, right? Well, look at the numbers about how this really impacts you as an individual, as an investor, with having a lower credit score versus having a higher credit score. Borrowers with scores above 760 save as much as $185 per month on a $200,000 mortgage. So over the life of that loan, you're gonna pay an extra $66,000 in interest payments for having a lower credit score. Versus having a higher credit score, you save that $66,000, and over that period, you can invest it in your education, you can invest it in travel or other investments. So it makes a lot of sense to clean up your credit score early to reap the rewards over your lifetime. If your credit score needs work, here's how you can improve it. In the early stages, this can take anywhere from 30, it says 180 days, but if you're aggressive, you could probably do it between 30 and maybe 4 months, 5 months. And before you know it, early 2022, your score will be exactly where you want it to be. Here are the 8 steps to a perfect credit score, or near perfect. First, you want to dispute any activity on your account that is not you. So in 2012, the Federal Trade Commission did a survey and found that 1 out of 5 consumers, that's a huge number, 20% of every American that has a credit score, they have activity on their account that is not them, that's decreasing their purchasing power, their ability to borrow money. So check with Equifax, Experian, and TransUnion, and you can use Credit Karma, you could use one of these major outlets to verify the activity on your account to see if there's anything there that's not you. And if so, dispute it. Second is you want to pay down your credit cards frequently. Ideally, you want to have balances less than 30% of the allowable spending limit. 30% or less. You never ever want to maximize the amount that you're borrowing. So if you have a $5,000 credit limit, you never want to spend $5,000. You want to keep that around $1,000 or $1,200 and making frequent payments to show that you're a responsible borrower. Next is you want to ask for a higher credit limit. When your credit limit goes up and your balances stay the same, you instantly lower your overall credit utilization. Call your bank issuer and ask whether you can get a higher limit without a hard credit inquiry. Hard inquiries can temporarily drop your score with a few points. Next, you want to ask for a higher credit card utilization with your credit card. Why would you want to do that? Well, if you're at Bank of America, and let's say you have one account at Bank of America and one at Chase, and you have 2 credit cards, one at each bank, and you have a total limit on each card of $10,000. And let's say that you owe $7,500 on each account. So you owe roughly $15,000. So you owe $15,000. If you were to get a higher credit limit, that would impact your utilization on your cards, because if you have 15,000, you're already at 75% utilization. If you can increase the amount of money that they're going to lend you, it's going to drop your utilization, which is going to make you more responsible of a borrower when they look at how much you're spending versus how much they would actually lend you. Next is you want to become an authorized user if you have the ability. So what is this? I would suggest asking a relative or a friend with a long record of being responsible with a high credit score to add you to his or her credit as an authorized user. So you don't need to be on the card in terms of having access to it and being able to spend money. No, they can simply just add you on the credit card, never give you the actual card, and you're going to reap some of the rewards of having been associated with them. So if you have a mom or a dad or a family relative, friend, someone that is very responsible, maybe they'll do you a favor and add you on their credit card as a authorized user. This will greatly help you. Next, you can keep your cards open. If your objective to improve and enhance your credit profile in the eyes of the lender, you should avoid closing credit cards. Why is it a bad idea to close a card? If you close a credit card, you lose the credit card's limit when your overall utilization is calculated. Just the reverse of what I mentioned above here when asking for a higher limit. Next is you want to pay every single bill on time. I pay all my bills early. But you want to at least pay all your bills on time. The biggest indication to your credit score is if you are making payments on time. Payment history and borrower's credibility is the single biggest factor lenders use to measure the risk of you as a borrower. If you do not pay your debts on time and are late even once, this can hurt you for 7 years. Next is you want to carry a small balance. Could be better than no balance at all. So lenders want to know that you're a responsible borrower. If you aren't using all your credit, how does the lender know that you're responsible? So being very, very responsible with the amount of money that banks and institutions are going to lend you, how much you're actually going to borrow, and on top of that, being responsible with the payments is going to really impact your score for the better. Now, one thing that could really help you is if you can't do this yourself. So you generally can talk to Equifax, Experian, TransUnion. If you have some default history, you have some payments that you just simply can't afford, call them or call the person that owns your debt and see if you can either get on a payment plan or if you can work something out with them to really clean up your credit. Or you can do something else. You can go on Yelp and search for a credit repair specialist. This will not be free. You can search for a credit repair specialist. You can search by most reviewed, verify them, make sure that everything looks good, and then work out a deal with them that you will make a small payment up front and you'll pay the bulk of the remaining fee on the back end once they show you the improved credit score. So once they actually show you a net result, a benefit to you, then you pay the rest. This incentivizes them to do a great job for you, and it saves you money up front knowing that they're financially incentivized to help you. So you don't have to write this big check. This might cost you $500 or $600, but if you're thinking about getting a mortgage, I mean, you saw the numbers before, $200,000 mortgage, if your credit score is in the lower 600s, it's $66,000. So I would definitely recommend working with a specialist if you need to, if you don't have the time to work on this yourself. But credit is very important, especially as we step forward into some uncertain times. Banks are going to be, I think, more reluctant to be as reckless with lending money. And so what's going to happen then? It's going to be harder to get a loan. So if it's harder to get a loan, opportunities are only going to go to those that have the cash and the credit. So now is the time. Now is the time to work on your credit score. And when you do, your life will be forever changed because of the benefits associated with all the cheap debt that you're going to be able to obtain. Please smash that like button, drop your comments below, subscribe here, and also consider subscribing on my personal channel. All your links pinned down below the top comment. I'll see you guys in the next video. If you've enjoyed this video and want to dive deeper into the real world of real estate investing, make sure to check out my gold standard program, Cash Flow Rental Blueprint, by clicking the link in the description below this video. We're currently living in very difficult times. I personally believe these are some of the hardest times that we've ever lived in. We are losing, in many cases, our families, our businesses, our jobs, our sense of security. All this is at threat right now. And it's all thanks to the draconian shutdowns that we're all faced to live under. It's times like these that we can see the value in having more than one stream of income. This is certainly not an unattainable goal or something reserved for only a select few. It is the achievement through education and hard work. Now is the time to be relying on multiple streams of income and not just Big Brother. I hate to be the bearer of bad news, but if you think that your pension is going to cover your retirement, you're going to be in for a rude awakening. Don't wait until misfortune knocks at your door. Be proactive and create more security for yourself and your family. One of the best ways you can earn a side hustle today is through real estate investing, something that I've been involved in for over a decade. The strategy is to invest in multifamily homes and live off of rental income through your tenants. These are some of the homes and apartments I currently own and I'm renting out. In my cash flow and blueprint, I'll teach you the ins and outs to real estate investing. You'll learn everything about recession-proof investing, real estate versus stocks, different types of real estate investing, how to appraise your own deals so you're not leaning on a third party to tell you what something is worth, out-of-state investing, maximizing your profits, and minimizing your expenses, improving your credit score, different types of loans and which one best fits you and your deal, selecting the right mortgage broker, finding the best deal, lease agreements, and how to find great tenants, and many, many more topics. This is my gold standard program, and in it I put together 1 decade's worth of experience and millions of dollars that I've invested, saving you the time and the money to learn the lessons that I had to learn. To learn more, click the link in the description below this video.